Hi, welcome to 5-Minute Financials with Jack Driscoll. Invest 5 minutes of your time with me to improve your financial well-being. There are a couple other itemized deductions we never even knew we had. One of them I'll point out, but it's the reimbursement for bicycle commuters. Now, who knew? But there was a reimbursement for bicycle commuters which let you knock off $20 from your income per month for the costs of bicycle commuting to work. Pretty cool, right? Although we didn't know about them, assuming we weren't enrolled in a commuter benefit program. But that's gone. So now you know, but it's too late because it's gone. The other thing is, I wanted to get into a major component of this new tax bill, and that is the estate tax. Now, the estate tax has a federal limit that any estate, which is the amount of assets and net worth that a deceased person is worth. And we call that an estate for short. So a federal estate is everything the federal government deems assets. That can be many different things: IRAs, individual retirement accounts, 401ks, houses, cars, annuities. It can include savings accounts, can include all the investment accounts. It can even include life insurance. So we look at what's subject to federal estate tax. All of that is subject to federal estate tax and has been, but the federal government also has always had in place a federal exemption where they say, until your federal estate exceeds X dollars in value. I remember when it was $600,000 per person in value was allowed to be transferred subject to zero federal estate tax. And any estate higher than $600,000 in value was then subject to a federal estate tax. Now, this isn't federal income tax. This is another tax that's created upon death that doesn't exist before death. So we have federal income tax, which we pay every year unless we're exempt. But all of us, our W-2s, our 1099s, we add them up, we file the 1040. That's federal income tax. But upon death, there's another tax in addition to possibly federal income tax, and that is the federal estate tax. Well, the federal government now has a limit saying which was pretty good, $5.49 million now was exempt up through 2017. So where I said I remember when it was 600,000, it's gone through many gyrations over the years to 2017. Any one individual could be worth in their federal estate up to $5.49 million before their estate would be subject to any federal estate tax. The new tax reform bill of 2018 basically doubles that limit per individual to $10 million. It's actually $10.98 million for married couples. So they doubled it. Now, what's interesting about that number is many of you are already hearing, no, the limit is $11.2 million. It's not $10.98 million. Well, the way the code is written is they doubled the number from 5.49, which was the original number in the tax code for 2017, and then it's inflation adjusted yearly. So that's where we're getting $10.98 million as the core number, but it's retroactive for a couple years of CPI. Inflation increases is taking it up over $11.2 million per person. So all federal estates under that are primarily exempt from federal estate tax. If you're married, that number obviously is doubled if you do it correctly. That's a huge difference, a huge benefit, making most of us not eligible and not subject to a federal estate tax. That's good news. Remember, it only takes 5 minutes to improve your financial well-being. Check back soon for more 5-Minute Financials with Jack Driscoll.